and zooming in on the crypto space. Zcash and Hyperliquid are bright spots. We're going to get into Hyperliquid a little bit in this episode. They are dominating in terms of price and mind share, both up bigly over the last few weeks. But other than those two token narratives, so we're talking the derivatives, the perpetual derivatives market, and the privacy narrative, there's not much happening in crypto these days. And Bitcoin has failed to reclaim the $80,000 level, while the rest of the altcoin market continues to bleed out in general. All right, Alex, take us through the Glassnode indicator as I pull it up.
Can I just say one thing? Since
No.
I've been gone for a little while, I don't understand how nothing has changed geopolitically since I've been away. I don't know why there's a surprise that macro is turned again. It's because for me, it's like a month passed, and nothing changed. So of course, it's to be expected. So anyway, that's just kind of funny to me. Having been gone for a month, it's like, yeah, nothing's changed. So of course,
It's surprising that it's kind of held up the way as well as it has. That's how I feel about it anyway.
yeah. I mean, I was gone, and I was just kind of looking at my phone and seeing things rally and seeing all the optimism kind of from afar, not really digging into it. And I was like, what the hell's going on over there? Oil's still struggling. I mean, oil supply is still struggling. So I just figured that this was inevitable. Anyway, that's all.
Graham, this is the oil inventory chart. Okay, yeah, now we're at the Glassnode chart. So I really like this chart from Glassnode because I think most on-chain indicators are kind of useless on their own, but this one just slops like six of them on one chart, so you can get a good little gauge. That's their risk indicator. So the blue line at the bottom is the realized price. The yellow line is active realized price, or the realized price of active wallets. They got the previous cycle all-time high, short-term holders cost basis, and the true market mean. And basically, you just gauge risk depending on whether price is above or below all of those data points. So you can see if you bought in late 2022, the risk was very, very low because you're below all those things. And if you were to buy between, let's say, November 2024 and November 2025, risk was very high. And so this has worked out historically as a pretty good spot to like gauge entry points and exit points. And basically right now, it's suggesting that it's not the greatest time to be buying Bitcoin. It's not the worst either, but you can still, we're very far above the realized price, which we historically go below. So yeah, suggesting a little more downside.
All right, let's get into the next one. The the cycle length chart.
Yeah, this one's nice. It's just using time. This was posted by Cyclop. He's an interesting follow. And yeah, it's weird. So every bull market is around 1,065 days. And then every bear market, or top to bottom, is around 365 days, like almost to the day. I mean, he's not like speculating or lying. He literally just drew from the top to the bottom. And it's played out each cycle so far. And it's suggesting that we don't bottom out till October of this year, if the cycle plays out. So I don't know, kind of lines up with what some other people are saying. I'm also kind of personally shooting for late this year as a time to deploy some dry pow. I don't know.
Yeah,
What do you guys think?
potentially
Yeah.
also potentially also lines up with TradFi markets. I mean, let's get into that next because there are quite a few things that I mean, as we hinted at in the intro at the start of this episode, uh, the things are looking a bit bleak in the macro environment. Let's get into some data points here, right? So obviously we have inflation. Inflation fears are rising. So more and more people are saying we're just going to see higher inflation. Then on the rates cut issue, the odds of a rate cut have cratered. Currently, just 37% on Kalshi that we get a rate cut before 2027. FedWatch has a 98% chance of no rate cut at the next meeting. We have the bond situation, as mentioned, in the US, Japan, and other countries. Yield getting forced up as demand for bonds is cratering. Of course, the debt to GDP situation in many countries, but I mean, people have noted the US, it's above 100% for the first time since 1946. And you have voices like the Atlantic Council warning that things won't be as smooth this time around as back in 1946. The situation was very different then. Yeah, I mean, so basically the U.S. debt load could undercut Kevin Warsh, who's coming in as the new Fed, his plan to shrink the Fed's balance sheet. So yeah, there was something else we had in the doc about stock markets. Yes. So Fed
all-time
Fed
highs.
transitions, right? Kevin Warsh is taking over as the new Fed tomorrow, May 22nd. And as people have observed, Fed transitions often lead to market corrections. So the stock market has corrected an average of 12% following the appointment of each Fed chair dating back to 1930. So it seems that the stars are aligning that we're going to, I mean, obviously stocks have been kind of bewilderingly at all-time highs here, despite the situation in the Strait of Hormuz and high inflation, like record poor sentiment in the US, like consumer sentiment, all these things. Yet the stock market keeps pushing higher. So it does, all these things seem to be aligning that we do seem to be in for a stock market correction. And then, yeah, that would align with, in terms of Bitcoin. Obviously, if stocks get a correction, the most likely scenario, Bitcoin also continues to bleed. And then, yeah, so October, they could, like that simple chart just pointing out the time of bull and bear runs. It could end up being that happens again.
I'm pretty bullish, actually. I think the bearishness now is that I see on the timeline and the things that you've said, they make me feel even more bullish. I do think we might have a little correction here for the next month or two or something like that. But I think the underlying signs are pretty strong. And from going around for conferences for the past month, it does really feel like TradFi and all these kind of institutions are really getting into crypto in a serious way, and that's going to translate into some pretty big growth here, I'd imagine, this year and into the future. The AI stuff, the overheating AI stuff, and the kind of worries about capex that I was worried about, and people like Ram from Bits and Bips were talking about a lot. That hasn't materialized. Also, forward guidance, they were talking about that a lot. The analogy that was being tossed around as soon as a month ago, or as early as a month ago, was this is like the .com capex build out, and that has kind of been discarded now as a kind of a very inaccurate analogous situation, because that fiber build out that we still haven't utilized fully, right? There's still dark fiber now to this day from that 2000 build out, which is crazy if you think about it. Anyway, that was all from companies that were not in tech. It was like VC funded utilities and things of that nature. The companies who are doing CapEx spending now are reporting greater and greater revenue every quarter, and their balance sheets are just amazing and in great shape. They spent the past 20 years basically debt free, buying back their stock, so they have an incredible amount of capacity, and it seems like the appetite for AI and compute, there is no we haven't reached the end of that yet. So this makes me think that what was the analogous situation they were using is maybe more akin to something like, I think it was like railroads or cars or I can't remember, something else, but not the .com CapEx spending. And if that's the case, that will kind of fuel the entire economy, right? The government, the U.S. government, big governments and organizations around the world are taking this seriously from a security perspective, national security. So that kind of funding will be there for a long, long time. I mean, years. And so with that as the kind of the backdrop, I feel like we are going to see at least 12 to 18 months of increased money in the system and kind of being used for productive purposes. I think if Bitcoin and crypto hasn't bottomed yet, we're pretty much close enough to it where I am starting to deploy capital now. I'm still expecting a correction. So this is whatever, not financial advice, kind of blah, blah, whatever. But I don't know. I'm pretty bullish now. The fact that sentiment is still so low is encouraging. I do worry a little bit about like hype and Zcash specifically right now, where it is right now, because I feel like that's all that anyone's talking about. So I could imagine we get like a little pullback, I hope, like a little mini blow off top thingy, because it seems to be carrying the market completely. And I don't feel very comfortable deploying heavily here, although I am dabbling just in case that it doesn't. But yeah, Bitcoin, hype, Zcash, I am very bullish on those, all three of them. I agree with like Taiki Maeda from Study Lads. He had a post. He has had several posts for like the past 2 months, but one of the more recent ones is something to the effect of we're in like this bull run's easy layup mode right now, which is you buy Bitcoin, you buy hype, you buy Zcash, and you sit on your hands and you go enjoy your life for the next couple of years, and you'll be heavily rewarded for that. And I think maybe that might be the play, right? Like I think that could be it. So anyway, those are kind of my high level thoughts on that. And I don't see Warsh really mattering that much, just with the backdrop of everything that's happening. Yeah.
All right, Alex, are you swayed by David's arguments there?
Yeah, I agree on a slightly longer time frame. I think this is the roaring 20s and everything goes higher and the rich get richer and the poor get poorer and more money comes into the system. I just, from like a tactical perspective, I do kind of worry that the stock market is going parabolic while Bitcoin does nothing. So what do we think happens when the indices correct? Is there going to be a capital rotation into Bitcoin, or is Bitcoin going to correct and make a new low? I think it's more likely that we correct, right?
But it's not the when you say the stock market is going up, yeah, that's true. But you got to look at what is going up, right? And it's basically everything that AI touches is being re-rated, from semis to memory, obviously the FANGs and all that kind of stuff. NVIDIA, whatever, however you want to pronounce it, becoming one of the most valuable companies. So it's not like you're seeing this just like a rising tide raises all boats. It's very much in certain areas. And now, again, that would be concerning, but I just don't think AI is done here. I really don't. I really, really, really don't. And I was worried about that like a month ago. I was like, I could see a pullback. Maybe this is getting overheated. But the earnings just came out, right? We just got through a little earnings season. Everybody's beating expectations. Revenue is growing across the board at like record levels. This is not. Yes, it's a bubble, right? But it's not. It's not like all bubbles are the same. And there's just a lot of capacity here. Now, here's an anecdote for you, Alex. When you say, I know you and I spar a little bit of this on your pessimism, rich are getting richer and all this kind of stuff. Okay, fine, yes. But when I was in Texas for the Bitcoin mining documentary, we were in like tiny little towns, like one street towns, people with teeth missing, talking with the twang, complaining about, I'm not even joking, talking about like, it's too many new folk in this town. There was like 20 hotels. They had just built 20 hotels along a highway, brand new hotels. And we were talking to people like, who the hell are these hotels for? These are like nice brand new hotels. It's all filled with like construction workers, maintenance people, oil people, right? The airports are ridiculously busy. They're building data centers. They're building a power infrastructure. These people are going to have jobs, and they're going to have great jobs for a decade or more, right? Like it's, but because here's the difference between now and the last 20 years. They are building things. They are building physical things that are going to require constant physical maintenance, upgrades, and things like that. And people in Silicon Valley are not going to be maintaining this and or building it. So it was really, really, really cool to see these little towns kind of like springing to life. And we just drove through tons of these little towns. Everywhere seemed optimistic. Everywhere was seeing growth. And it's not like, these are not like metropolitan areas or things like that. So when you get this kind of CapEx stuff, if you get manufacturing coming back to America, you're getting power being built. I think somewhere I read somewhere that the Trump admin just pushed through a thing for creating 10 of the kind of mega nuclear plants, like 1,000 megawatts, something like that. They're building 10. That's the start. I don't know. I feel like it's not going to be exactly the same as the past 25 years, where the FANGs, these mega companies, these mega scalers, can concentrate all that profit in themselves. And this is the thing that people on Wall Street have been talking about, is actually you have to be careful how you value these giant mega companies like Google, Facebook, and so forth going forward, because they're going to have to spend a lot more money for a level of profit that's just not going to be the same, right? Because they have to build shit. So,
well, that would be a bearish point for the stock market, where these like mega corporations for the past decade have been doing like sitting on cash, doing buybacks. Now they have to spend their money.
Yep.
And so you could see that this will have a downward effect on their price of the the stock.
It won't have a downward effect on their price because they're still making a butt ton of revenue. It would have an effect on their future price, right? How much the price will go up in the future, right? What's their value versus forward expectations? And of course, that's what's going on. But the other side of that, Graham, though, is that you're seeing insane re-ratings of anything to do with this supply chain. Like, what was it? Like some memory supplier went up 300% in the past 30 days. This is like I think it's already like $100 million or $1 billion company or whatever, and it went up 300% in a month. I mean, so you're gonna see Google or Apple, or maybe not Apple, they're not doing this yet, but Google, Facebook, they should probably grow less quickly, right? The market cap, the price of the stock, but I think you'll see just this whole kind of area re-rate, and you'll see things like you'll see all this kind of stuff, this whole thing trickle down more, if you will. But
Where I
what
do
is this
agree with you, David, is I totally agree that Kevin Warsh is not going to change anything. I definitely think he's like all of his talking points are a psyop against the plebs to prevent people from front running the next phase of asset inflation. So, I mean, this is like something it's almost consensus. Like Bitcoiners and crypto people have been on this for a long time. Raoul Pal is obsessed with it, and like Luke Roman's obsessed with it. And like how convenient that as soon as it becomes consensus, you have this guy Kevin Warsh that comes in and starts talking about how, you know, QE is reverse Robinhood and we got to save the wages. I think it's just a cover because they're about to do the exact opposite. Like anyone who takes an honest look at the markets and the U.S. fiscal situation, they know that the most plausible course forward is more spending and significantly high inflation to manage the debt. So I totally agree that nothing stops the train, especially not a new Fed chair.
Yeah, I mean, but it does matter where the spending goes, right? Like, so Lynn Alden, Neil Ferguson, other people have talked about this, right? This is like the phrase fiscal dominance, right? When you basically are getting like state-directed capital, and this is not an ugly word, right? This is done in World War II, right? This is a command and control directed economy. It's just kind of where you direct it could be like a very bad outcome, or like in the case of China for the past, I don't know, 30, 40 years, it could be quite good for people, individuals. So I don't know. I mean, I of course I have a lot of skepticism, but compared to how I felt in, let's say, 2008, after from 2008 to 2010, when nobody got prosecuted for their crimes against humanity and the GFC, I'm a lot more optimistic now, and I think you could see money, whether it's printed or not, being directed at kind of more, what's it called, things that more directly affect GDP growth, right? Basically giving people stuff so they can do work. But yeah, we'll see. Having said all that, like Alex, we talked about this a little bit yesterday in our live stream. Shout out to our live stream. Alex and I get spicy on Rumble exclusively. Go check it out. But I think if you take the most bearish case for what I'm saying, which is that assets in general, right, capital will start to lose out a little bit to labor, as in you'll see more resources being poured into capex intensive things where you need people to do work and build stuff. Sorry, that should at some point slow down this insane growth we've seen in the stock market for the past 26 years. However, as it pertains to Bitcoin and crypto, it's still such a nascent industry. It's worth nothing. And so as crypto gets adopted, co-opted, or whatever, however you want to do it, bearish or bullish, you should see like a meteoric rise in leading crypto assets, like for sure, right? And you could see stagnation in the stock market, which I would predict over the long term, 2 decades. That's honestly my optimistic take, is that's you'd see that, because if you don't, then Alex, you're right, and it's kind of gets even more weird and messed up. But it shouldn't really have an effect on Bitcoin and crypto because it has to make up so much for so much.
Okay, let's switch gears and touch on the Hyperliquid situation for a few moments. So just a quick summary there. USDH, Hyperliquid's native stablecoin getting replaced or sunsetted by USDC. So USDC being ordained as the stablecoin of choice on Hyperliquid, Circle paying 90% of the yield that's generated by the treasuries that back USDC. 90% of that will go to Hyperliquid, so in the form of token buybacks.
Pretty impressive.
And yeah, so we could talk about the leverage that Hyperliquid's managed to obtain there to get that deal, and whether or not it's a win-win. Let's start there. Is this a win-win? I mean, Circle wins, Hyperliquid wins because they get their network effect intact. They keep their network effect intact on Hyperliquid, and Hyperliquid wins because they get most of the yield. Is there anything beyond that?
I mean, I do think it's a win-win. I think Hyperliquid wins a little more than Circle, but for right now, Circle's probably happy for this. They're playing a different game, right? Stable coins are already starting to get pretty crowded, so Circle is going to be just fighting for market share, probably with the long-term goal of or belief that it'll be a winner-take-most kind of situation. And if that's the case, then they just want to have as much. They want to be used as much as possible and then make up for it in volume, right? And so it's more important for them just to be the thing that people are using. In the future, if Hyperliquid does become like this dominant place for perpetual derivatives, right after like the TradFi kind of wades in and fights it out with them, I can imagine Circle maybe revisiting this arrangement, right? Like, it's 90 is pretty high. Let's kind of try to push it down a little bit. So, but at the moment, I don't think they really care. And so it's a win for Circle, and obviously it's a win for Hyperliquid because it just feels more hype buybacks. And they were, as we discussed earlier this week, Graham, USDH didn't really seem to take off very much, right? Like all the biggest pairs with the most liquidity were still USDC denominated. So, or they're like not denominated. They're still paired with USDC. So, it's obviously a win for them, and maybe gives them a little more legitimacy or press, things of that nature.
Okay, now we also noted in the weekly earlier in the week that some of the TradFi big boys, what was it, CME, ICE, kind of making a stink, saying, "Hey, the Hyperliquid's illegal," and come on, government, teacher.
What's that voice? I was trying to. Was that a redacted? Was that a redacted voice? Was that a?
Yeah. So. Yeah, the TradFi derivatives big boys doing a bit of whataboutism there over trying to tell the teacher to look into Hyperliquid, and so I guess that frames the issue here. Will regulation eventually kill Hyperliquid or destroy its competitive advantage? The fact that Hyperliquid is no KYC. Anybody could just go on there and start trading. And mind you, now they're moving into stocks. Maybe that makes things a little more touchy for the TradFi bros or the regulators. How does this play out in the long term?
This is the big question, right? Do you think Hyperliquid can let's say Hyperliquid gets KYC AML'd, and all indications point that to the fact that it will, at least for people in the U.S., or if they offer U.S. based perpetual derivatives. I don't know exactly what they're going to do. and CME, ICE, TradFi institutions are able to offer perp derivative pairs. Will Hyperliquid have a moat? Will they be able to compete?
Yeah, there's a few different. I think it depends on how much they get KYC and AMLs. Like they could go offshore and not have any US users and not have any access to US securities, which would, I guess, be the most realistic like way to avoid KYC and AML. But
Well,
that would
they
kind of
already
suck for
do
them.
that. They already gate US users. So nominally, if you're a US user, you're not allowed to use Hyperliquid. So you have to VPN.
No,
I've heard if
yeah,
you're a US person in the US, you have to VPN to Hyperliquid to use it. So
right. I heard that too, allegedly. Or they could just yeah, or they could offshore, but then the US users could still trade, or they could offshore the protocol, but then have like these regulated US front ends. I don't know, but I do wonder if Scott Bessent and the Treasury, just like they've decided that stable coins are useful for like dollar imperialism and good for treasuries and good for the United States. I wonder if they've decided that privately tokenized stocks are good for Wall Street imperialism. If you're going to dollarize the world and people have access to dollars, maybe you could funnel those dollars back into the United States, into U.S. securities to pump the stock market and to siphon wealth back into Wall Street. I guess I mean that depends on the architecture too. If it's perps, then I like yeah, it doesn't necessarily mean that capital is like directly affecting the price of securities. But yeah, I do wonder if they've decided that this is good for the United States and they're just going to put it on the back burner for a few years and not actually do anything to regulate it too much.
yeah, I mean, that's a good point. I think though that what's gonna push them is just the TradFi institutional lobbyists who are going to be like, dude, we have to adhere to all these crazy rules for derivatives and whatnot. Like, this is on Bloomberg. This is on Bloomberg and MSNBC and all these channels about how everyone's using Hyperliquid over the weekend for oil futures. For like, it's just like it's in the, like the U.S. regulators' face, basically, right? CFTC and whatnot. Like, so it'll be very interesting to me. What I'm really interested in is how and what are they going to do for this. Like, for example, let's say Hyperliquid is like, fine, we're gonna completely ban anyone in the U.S. Will that be enough? I wonder. Right? Will CFTC, the government, be satisfied for not having no ability to assert some control over that? My intuition is no. that they'll still they'll still want to have some say in this supposedly decentralized thing. But I don't know. I have no idea what I'm talking about. I'd love to interview some people who might know. I know a guy, actually. Maybe I should get him on. Yeah. That could maybe speculate on this, right? Here's something that I hate hearing, Graham. You'll love this. You hear on like Silicon Valley and crypto podcasts a lot. I think there's a lot of path dependency for how this plays out. So for example, if it takes a long time for the CME and ICE to get their act together, and it gives giving Hyperliquid even more time the better to be kind of the place for perpetual derivatives. That might, as time progresses, that'll be, I think, harder and harder to overcome, I guess. And let's say that CME and ICE have a little trouble getting their act together, and Jeff and the Hyperliquid team realize they need to be KYC AML'd as soon as possible to get as much liquidity on the exchange as possible, right? They probably don't care very much that they'll be kind of under the regulatory authority of the U.S. if it means that all the deep capital in the U.S. can then go on chain at Hyperliquid. that to me is kind of the bullish case for Hyperliquid, because CME and ICE, they just handle much more liquidity, and I feel like at the end of the day, once those two venues have 24/7 quickly listed perp pairs, perp markets, why would anyone choose to use Hyperliquid after that in size?
Yeah, it looks like they are
Right.
trying to just copy it
Hyperliquid.
directly too. The New York Stock Exchange, it's already been reported that they're planning like the exact same thing as Hyperliquid, but like the nice TradFi UX version, 24/7 round the clock trading, instant settlement, stablecoin style funding. Once they get approval, I mean, yeah, you're right. How does Hyperliquid respond to that? And why would anyone go on Hyperliquid when you can just go onto a nice TradFi platform?
Well,
I guess that doesn't change
because you
anything for
don't live
people.
in the U.S.
Yeah,
Yeah, but
that's the one thing. But there's not as much money out there.
there's like no money, right? Like, so we look at TradFi, all the deepest liquidity in the world, right, for stocks, for bonds, for anything, is in the U.S. So if you have money and you live abroad, you trade in the U.S. everywhere, always, right? Like, so yeah, I mean, there'll always be a baby infant market for not like a offshore thing, but it'll never compete with where the big institutions can play, right? And the big institutions want to play in a regulated market, in the regulated U.S. markets, because they don't want to make the U.S. upset, and they want to like have all that risk management and due diligence and things of that nature. So I think that's probably why Jeff was in America this past week saying like, we're talking to regulators, because they want to get access. They want to allow institutions the ability to use their product in size, I think. Yeah.
Okay, so it seems like if they can pull that off, then there's a brighter future perhaps for Hype. Currently, it's going a bit parabolic, almost $14 billion market cap right now, up almost 20% in 24 hours. A lot of hype around the Hype token. Sorry, I had to do it.
Worrisome.
Let's move on to our last topic of the day, a little crypto security crisis. So Bloomberg reported that the crypto industry is increasing its focus on physical securities after a rise in kidnappings, as we know, assaults, armed home invasions, extortion attempts. I believe it was reported that Brian Armstrong, Coinbase, is he CEO? Coinbase guy, spends
Yeah, CEO.
$8 million a year on security for
A
himself.
year.
Must be a year. Must be per year. Yeah. So the risk of, I mean, I guess I wonder.
Is that
do
cybersecurity,
all
Graham?
billionaires? No, like personal physical security. I wonder, do all like super high net worth individuals have a similar security bill, or is those in the crypto space, are they particularly burdened? David, I wonder, you've just come from some crypto conferences, Bitcoin Vegas, Consensus Miami. I heard rumblings that they would be a bit empty because the bag holders are scared to show up for fear of being like wrench attacked, showing their face. Was that the case, or was there maybe just more security on hand? Did you notice anything like that?
Yeah, I mean, in terms of like attendees, I didn't really get a great feel for it. Because I was busy working, but I did notice, and I'm not going to name any names but like I did notice that pretty much almost every like high visibility figure that I came into contact with or I saw from afar had physical security, has security guards. Every single one. And some that I was surprised at, like who are even in the media, right? Like media figures. They had personal bodyguards and stuff. So, yeah, it's real, and it's very noticeable compared to 2 years ago when I started, and you wouldn't see this very much. The security stuff is.
Vitalik is still walking around in sandals on the streets
doubt
of
it.
Brussels.
I doubt it. I really do. I doubt it now.
That's the worst spot to be walking around in sandals. Brussels.
Yeah, he was.
It was at PBW too, David. Lots of people walking around with scary looking guys tailing them the whole time, giving everyone the bug eyes.
Yeah,
as they should.
Yeah. So definitely notable. I'll tell you this much. I was on like hyper alert. I was in Paris and in America. I didn't want to go do things. I didn't want to be seen. I would always change my clothes, hide any kind of crypto paraphernalia or anything like that.
You're safe, David, for a couple of reasons. One, you're poor. Two, most importantly, you're poor, but also you didn't pay
Very
taxes
poor.
in France, so you haven't been doxxed.
Yeah, I mean, that's really true on both counts. The problem with the poor thing, which used to make me feel like used to give me a lot of solace, is we had stories this year about people like cutting fingers off for like $70,000 worth of crypto, right? $150,000 of crypto. That's like that. So yeah, you scream, "I'm poor," and they're like, yeah. Give us your $50. Fingers gone. $50 of Bitcoin. So yeah, I mean it's still worrisome, and like people just don't believe you, right? That's the one thing I've noticed in crypto. It's been talked about on the timeline a lot. Is people wildly overestimate how wealthy other people in crypto are. They're like, "Oh, you've been in since 2017. Boy, you must be wealthy." I'm like, "Do you see what I'm doing? Do you see what I'm denigrating myself with? Get out of here."
And you don't just have to pay taxes to get doxxed. Like there's so many attack vectors now. Like in the States, there was those guys that they hacked into DoorDash's platform and they found the accounts of like known public crypto holders. And once those people made an order, they would know, and they showed up to their house with like a bag of food. So like imagine that, like you've got your seed phrase somewhere safe. You're self-custodying. You're doing everything that Andreas Antonopoulos told you to do, but then you make the fatal mistake of ordering shawarma on a Tuesday night, and all of a sudden there's some guys in ski masks with zap straps and box cutters or whatever, and your life savings is gone. So
hold on,
it's like a total.
These guys hacked into DoorDash and found some whales on DoorDash. I guess that was.
Yeah, this was in the Bay Area. In Los Angeles, the media didn't report on who it was, but
somebody used a wallet that touched or was like a wallet with big holdings in it to pay.
No, they don't need.
No, Graham,
they don't need access to the wallet. They just know their name and the address.
Yeah, exactly.
Well, how do they know they have crypto?
Well, here
because they're public.
You get ChatGPT.
Oh, I see.
You get ChatGPT to give you a list of every crypto company and the top 20 employees, and just
well, don't tell them how to do it.
Oh, they already know. I mean, it's basic, and then that's what you do. Or you make a list to like go to YouTube and get every crypto influencer on YouTube. So yeah, they could be visiting us next. I'm like, I'm poor. Trust me, I'm poor. Like, yeah, we've heard that before. Finger goes away. So.
It's a total like existential crisis for the "not your keys, not your coins" mantra. Because like, what good are the keys if you have zero chance of defending them? I mean, like, and even it used to be a sin to talk about this, but like even Plan B, the anonymous OG, he just like a couple of years ago, he just casually said that he just put everything into ETFs I heard Austin Campbell on a podcast a couple of months ago. He was talking about how he's long Bitcoin, but then he had to add in the fine print underneath that statement that, but it's all an ETF, so don't come and mug me. It's just like,
Yeah, exactly.
and
Yeah.
it's kind of true. Like if some guys came into my apartment right now with Zap straps, like they can't seize my stock portfolio, and it would be very hard for them to steal stuff from my bank account because that can all be reversed. But yeah,
Yeah.
when you self custody, it's just such a huge risk. It's kind of hard to justify. Sorry.
Yeah, I've been saying this for years, and nobody likes to hear it. But it's like the equivalent. Again, it's the exact equivalent of having a bunch of cash under your mattress. And if people know you have cash under your mattress, and you only have $10,000 of cash under your mattress, only $10,000, boy, I know a lot of bad hombres who would love to get a hold of 10,000 in cash. So
Well,
yeah,
if I had $10,000 in crypto or cash under my mattress, I'm telling you right now, I would die for that. So I've got machetes positioned all around this house. Come at me.
Graham, not to get too dark, but one of the ones that happened in the Bay Area right before I left, you know what they did? They ignored the holder of crypto and they went after his wife and kids. So the guy wasn't even there. He wasn't even on the premises. And phoned him up. Was like, "Hey, here's a video chat of your wife and kids. We're gonna start doing things to them. Give me your crypto." And obviously he did. So that was that. These criminals, man, no honor.
I guess the trick is just to stay poor and keep buying Celestia and Cardano
Same.
and just like, what are they going to seize from you?
Yeah.
All right. Let's wrap it up on that dark note. It's good to have you back, David. Nice chat. Thanks, Alex.
Yeah.
And that wraps it up for another episode of Token Narratives. Catch us next week, where we'll be, doing the token narrative thing. Also, we got a bunch of interviews coming out, as always, on the Bitcoin.com news channel. And the weekly coming up, I think we're doing it on Tuesday next week. There's a holiday in where our editor is in Korea. Anyway, we'll be back soon. Keep your sticks on the ice.
Canadian.